Hey guys, what's up? Spenny here. So in today's video, I'm going to be showing you two penny stocks that have massive upside, and they also have a lot of tailwinds behind them. It's going to make it really easy to get a good return on your money on both of these stocks. So make sure you watch to the end to see what I'm talking about. But before we get into this video, make sure to drop it a big thumbs up. It really helps out with the YouTube algorithm. And feel free to subscribe if you want to see more content like this. I cover stocks every day of the week. And also make sure you check out the links down below in the description. I have a Webull link where if you sign up and deposit just $100, you'll get 4 free stocks. So the first company I want to get into is American Battery Metals Corp. Now this company I think you guys are going to like a lot. So let me quickly read what they do. So ABTC is aggressively building a no-waste, economical and environmentally sustainable system to recycle waste and end-of-life lithium-ion batteries from consumer electronics, electric vehicles, and energy storage applications. Such efforts offer the opportunity to positively impact multiple battery metal supply streams, including lithium, nickel, vanadium, manganese, and the ever-volatile cobalt supply chains. ABTC is committed to our larger holistic plan for cleaner, more environmentally friendly energy. So, to me, that's a really exciting penny stock. It's no secret that there's going to be a massive electric vehicle boom over the next 10 years. They all require lithium-ion batteries at the moment, and they need to somehow dispose of these. This company is based out of Nevada, and that is the business they're in. So let me continue with how they do this. So the first step is the battery disassembly. Contents removed from automated 3-hour process of ingesting materials and removing contents as quickly as possible to minimize chances of pollution, and then extraction of the materials. Using a process backed by trade secrets, chemicals are kept in a closed system, clean filtered, and reused. Any water discharge is treated to a cleaner than potable standard. And then there's the purification. Individual metals are separated and purified into battery-grade components. Then the next and last step is the battery-grade materials provided manufacturers. So high-grade metals including lithium, cobalt, nickel, aluminum, copper, and graphite, and are provided to OEMs and manufacturers. So that's a quick rundown in the business, but we got to talk about the financials because this is a super speculative play. I love the business model and I love what they're doing. I think there is definitely going to be a lot of demand for this service, and it's really important to be able to recycle these batteries, otherwise they're terrible for the environment. And what's the big point of going green if we can't deal with the batteries themselves? So this is a really important company, and I like to invest into companies that are actually changing the world and making it a better place. I think that is very valuable, and the stock market usually does see that value. But this is speculative. So let me show you some of their financials. So right now they only have about 1.3 million in cash, really not a lot of cash. And so what that means is they're going to need to raise more debt. So they need to take on more debt to have more cash to build out this business, or they need to dilute shareholders. They're most likely going to be doing both. They're most likely going to be taking on more debt and diluting shareholders. So this stock is very speculative. Don't get me wrong. Their total assets is only 1.6 million. If we look at their liabilities, they have total liabilities of 5 million. It's a really bad ratio. You usually want more assets than liabilities. This is speculative, guys. However, it doesn't mean it's a bad investment. You just need to know that you're getting in this really early before it's actually proven. Anyways, let's continue over to their revenues, and you'll notice they don't have any revenue. So they are pre-revenue. 0 revenues are now. They are currently building out the business, and they don't have a lot of cash to build out this business. So yeah, prepare for extreme volatility. Pre-revenue company. And you can see here, so for the 3 months ended September 30th, 2020, they had a net loss of 2.4 million. So that can kind of give you an idea of how much cash they're burning. This is indicating to me they are going to need to dilute shareholders and take on a lot more debt on a very consistent basis. So yeah, it is what it is. Very speculative business. But I think that in the long run, this could do really well as long as they don't go bankrupt. I think it's either this company goes bankrupt or it 10x's. It's really one of those positions. And let me also cover exactly where they are in the development of their factories. So it says here, ABTC took control of 12.5 acres of industrial land for a pilot factory in Fernley, Nevada in August 2020. So this is the factory they're building out. The next paragraph, it says the first phase of the factory will consist of approximately 30,000 square feet of industrial processing space, as well as laboratory and office space. And then the third paragraph, it says, our Fernley facility will be designated to annually manage 20,000 metric tons of scrap materials and end-of-life batteries. To put this in context, currently only 90,000 metric tons of battery materials were recycled globally in 2019. This plant will continue to manage 20,000 metric tons per year for the foreseeable future. That is basically where they are in their operations. I'm sure they will start making money soon, but you guys just got to understand this is a very speculative stock. If you're going to invest in it, personally, I would treat this as like a 0.5 to 1% position, nothing more. So if you have $100,000, I'd be looking to add $500 to $1,000, and then you basically got to expect that's either going to go to zero or it's going to 10x, maybe even 20, 30x. It really depends on how much revenue this business can actually create. I have no way to project how much revenue this business can actually make, so I don't know. But I think there'd be a lot of potential, especially into the future. I don't know if that potential is going to be in the next couple of years, but certainly I can see that potential really picking up over the 5, 10, 15 years out from now. Anyways, that is that company. I hope you guys liked it. Let's move on to the second one. I've mentioned this one before, but I need to stress this one is super undervalued, and I think it just offers a really good risk versus reward. That company is CBD MD. Ticker symbol is YCBD. They're currently trading at $2.62. About 6 months ago, they were in the dollar range. They spiked up to almost $4 a share, crashed down to under 2, and now they're trading in the mid 2 range. I think this is a perfectly acceptable spot to buy in. I'm currently invested in this company. I have about 2% to 3% of my portfolio in this one. It's a speculative position, but I just think it's an easy one to make money on if you hold it. So let's get into what they do. So it's really simple. They sell CBD products. They mostly sell online, but they're also in a lot of stores across the United States. And like every month, I keep on seeing that they're getting added to more and more stores. Their product is super high quality. It's been tested and the grade is like 99% CBD. So this isn't some fake product they have. One of the most exciting products that they do sell is their PAW CBD line. So you can see here that quarterly net sales are expected to increase between 30 and 34%. So this is a very fast growing product. And really, I think this company is trading at such a low valuation. It's insane. So let's get into their valuation so you guys understand. If you just go over to Simply Wall Street, it says here this company is trading 86% below our estimate of its fair value. In my opinion, they are fully correct. This is really undervalued, and they did just become profitable, so it's not like they're burning through a lot of cash and they're at risk of bankruptcy. They have way more cash than they do debt, so there's zero risk in that. And let's go over to what Yahoo has for their financial situation. You can see they are a very small company. They have a market cap of 136 million. I think easily right now this could be a 250 to 300 million stock, and that would be an acceptable valuation. Their PE ratio is only 3.41. Usually when you see that, it sets off red flags. Usually it's indicating maybe this company is going bankrupt or it's going to perform extremely bad over the next few years. But the thing is with this stock, analysts aren't even projecting this company to have bad revenue over the next year. You can see that the analyst's average price target is $5.20. Yes, guys, $5.20 is trading at $2.62. Really undervalued. And like I said earlier, they aren't expected to perform bad. Next year, analysts have it growing at 22%. If this company is growing at 22%, they should not have a 2 PE ratio. And also, I think 22% is actually low. This past year, they grew about 75%. I have no doubt they're going to grow between 30 to 50 plus percent this next year. 22% is super low. I can't imagine a situation where they'd grow less than that. And so I think they're going to beat analyst projections. And I think over this next year, we're probably going to see this stock 2x. That would be kind of my prediction on this. I think that it could trade about $5 to $6 a share a year from now. But anyways, we'll have to see what happens. I think this stock is going to go way up. In fact, I think both of these stocks could actually be really good buys right now. Just understand that you're getting into very speculative positions that should only be about 1 to 3% of your portfolio. You don't want to be going all in on penny stocks. These are super hit and miss. I do like to play around in them, and I've had really good success in picking penny stocks. So hopefully these play out as well. I'm not invested into the battery penny stock there, but I am invested into CBMD. Anyways, guys, that is all I have for today's video. Let me know down below in the comments what you think of these companies, and make sure to drop this video a big thumbs up if you liked it. Thanks for watching till then. I'll see you guys in the next video.